Hey, economic warriors. It's your boy, the boss of economics, back to break down the hottest, juiciest, and downright messiest financial drama of 2025. Today, we're diving headfirst into the Jackson Hole showdown where central bankers are trading their spreadsheets for swords to defend their independence, and Donald Trump is swinging his tariff hammer like a reality TV villain. Buckle up, because this is going to be a wild ride through inflation fears, dollar dives, and political power plays. Let's get it. Picture this: the majestic Teton Range, crisp mountain air, and a room full of central bankers sipping artisanal coffee while pretending to care about labor markets in transition. But let's be real, this year's Federal Reserve Symposium isn't about research papers or macroeconomic buzzwords. It's a full-on cage match to defend Fed Chair Jerome Powell from the relentless attacks of President Donald Trump. And trust me, folks, this drama has more twists than a Netflix thriller. On one side, we've got Powell, the stoic guardian of central bank independence, backed by a global posse of monetary heavyweights like ECB President Christine Lagarde and Bank of England Governor Andrew Bailey. On the other side, we've got Trump, who's treating the Fed like his personal ATM, demanding rate cuts, threatening to fire Powell, and even calling for the resignation of Fed Governor Lisa Cook over alleged mortgage fraud. Oh, and did I mention he's already plotting to replace Powell with a yes man when his term expires in May 2026? Yikes. So, what's really going on here? Is this just political theater, or are we witnessing the slow-motion car crash of central bank independence, a cornerstone of modern economics? Let's peel back the layers, from the surface-level drama to the deep economic issues, and sprinkle in some spicy data to keep things real. Because here at Boss Economics World, we don't just report the news, we roast it, toast it, and serve it up with a side of truth. First, let's talk about the headline-grabbing chaos. Trump's been on a tear since returning to the White House in January 2025, treating the Fed like his personal punching bag. He's demanded rate cuts to juice the economy, threatened to fire Powell, despite the Supreme Court saying, no, you can't, and even tried to drag Fed Governor Lisa Cook into a scandal over mortgage fraud allegations. This week, he upped the ante by promising to replace Powell with someone more compliant when his term ends next year. Translation: Trump wants a Fed chair who'll say, yes, sir, and slash rates faster than you can say make America great again. Now, if this sounds like a reality TV script, that's because it kinda is. But here's the kicker: this isn't just about Trump's ego or Powell's job security. This is a full frontal assault on the idea of central bank independence, the sacred principle that monetary policy should be free from political meddling. And it's got central bankers around the world sweating bullets, because if the US Fed falls, who's next? Let's zoom out and get to the meat of the issue. Why do central bankers care so much about independence? Simple: it's the best defense against inflation running wild. Back in the 1970s, the Fed was too cozy with politicians, cutting rates to boost short-term growth at the expense of long-term stability. The result? Double-digit inflation, stagflation, and an economy that looked like a bad disco party. Enter Paul Volcker, the Fed chair who said, enough is enough, jacked up rates, and tamed inflation, while also proving that central banks need to be free from political pressure to do their job right. Fast forward to 2025, and the data backs this up. A 2023 study by the International Monetary Fund, IMF, found that countries with more independent central banks have lower average inflation rates, around 2 to 3% annually, compared to 6 to 8% in countries where politicians meddle. Look at Turkey, where President Erdogan has treated the central bank like his personal piggy bank, firing governors who dared to raise rates. Result? Inflation hit 85% in 2022 and is still hovering around 50% in 2025, according to the Turkish Statistical Institute. Or take Brazil, where political pressure on the central bank in 2021 led to a currency crisis and inflation spiking to 10%. The lesson? When politicians play central banker, the economy pays the price. So, when Trump demands rate cuts to make the economy great again, he's not just attacking Powell, he's flirting with a recipe for disaster. And the global central banking crew knows it. That's why Lagarde, Bailey, and even Bundesbank President Joachim Nagel are rallying around Powell like he's the last Jedi defending the galaxy. As Nagel told Bloomberg, independence is part of the DNA of central banks. Translation: back off, Trump, or we're all screwed. Now, let's talk about the fallout from this mess. Trump's attacks on the Fed aren't happening in a vacuum, they're part of a broader economic chaos that includes his chaotic tariff campaign and a deteriorating U.S. fiscal outlook. The result? A sell America trade that sent the U.S. dollar plunging more than 10% in the first half of 2025 against a basket of developed market currencies, according to the Federal Reserve's Broad Dollar Index. That's the worst first-half performance since 1973, folks. And while a weaker dollar might sound like a win for U.S. exporters, it's a double-edged sword. On the bright side, emerging markets are loving it. A weaker dollar has given countries like India and Indonesia some breathing room, as their currencies strengthen and their central banks can ease monetary policy without fear of a currency crisis. According to JP Morgan's Emerging Markets Currency Index, EM currencies gained 8% against the dollar in the first half of 2025, while EM bond yields dropped by 50 basis points, per Bloomberg data. It's like a global party until the music stops. But here's the dark side: a weaker dollar, combined with Trump's pressure on the Fed, is eroding confidence in U.S. monetary policy. And confidence is everything in economics. If investors start doubting the Fed's ability to keep inflation in check, we could see a vicious cycle of higher inflation expectations, higher borrowing costs, and yep, you guessed it, actual inflation. Just look at the US 10-year Treasury yield, which spiked from 3.5% in January 2025 to 4.2% by August, per US Treasury data. That's a sign markets are getting nervous, folks. And let's not forget the home front. Sure, US stocks are near record highs, with the S&P 500 up 15% year-to-date as of August 2025, according to Yahoo Finance. But that's partly because investors are betting on rate cuts that Powell might not deliver if inflation risks linger. The latest Consumer Price Index (CPI) data shows U.S. inflation at 3.1% in July 2025, above the Fed's 2% target, per the Bureau of Labor Statistics. If Trump's pressure campaign undermines the Fed's credibility, that number could climb higher, and fast. Here's where things get really scary. Trump's attack on the Fed isn't just a U.S. problem, it's a global one. If the world's most powerful central bank loses its independence, it could embolden populist leaders in more fragile economies to follow suit. And trust me, we've seen this movie before, and it doesn't end well. Take a look at the data. According to a 2023 ECB paper, between 2018 and 2020, de facto central bank independence deteriorated in nearly half of the economies accounting for 75% of global GDP. Countries like Turkey, Brazil, and Colombia have already paid the price, with currency crises, runaway inflation, and economic instability. And now, with Trump setting a precedent in the US, who's next? Hungary? Poland? Argentina, where inflation is already at 90% in 2025, per the National Institute of Statistics and Censuses? This is why central bankers are turning Jackson Hole into a rally cry. As Adam Posen, president of the Peterson Institute for International Economics, put it, this is their opportunity to do it for a US audience. And they're not holding back. ECB President Christine Lagarde has already called Powell the standard of a courageous central banker, while Reserve Bank of India Governor Sanjay Malhotra praised him for standing strong. It's like the Avengers assembling to defend the infinity gauntlet of monetary policy. So, what's the big picture here, folks? This isn't just about Trump versus Powell or even the US economy. It's about the future of global financial stability. If central bank independence crumbles, we're looking at a world of higher inflation, weaker currencies, and more economic crises. And let's be real, ordinary people, not politicians, will bear the brunt of it. Higher prices at the grocery store, higher mortgage rates, and lower savings value. Sound fun? Didn't think so. Here's the kicker, the Fed's in a no-win situation. If Powell caves to Trump's pressure and cuts rates too soon, he risks stoking inflation and undermining the Fed's credibility. But if he holds firm, he fuels Trump's attacks and risks political interference that could do even more damage. It's like choosing between a punch to the face or a kick to the stomach. Either way, it's gonna hurt. And let's not forget the irony here. Trump's obsession with low rates is all about boosting short-term growth, but his tariff wars and fiscal recklessness are what's tanking the dollar and spooking markets in the first place. Maybe instead of attacking Powell, he should look in the mirror. Just saying. So, what can we, the economic warriors, do about this mess? First, stay informed. Follow the data, not the drama. Keep an eye on inflation numbers, currency movements, and central bank statements. Second, call out political meddling when you see it, whether it's in the US, Europe, or emerging markets. And third, diversify your investments. With the dollar on shaky ground and inflation risks rising, it's time to think global emerging market bonds, gold, even crypto if you're feeling spicy. As for Powell and the Fed, all eyes are on his Jackson Hole speech this Friday. Will he signal a rate cut in September, as investors expect, or will he double down on independence and risk Trump's wrath? One thing's for sure, the stakes couldn't be higher. Alright, economic warriors, that's all for today's episode of Boss Economics World. If you love this breakdown, smash that like button, subscribe, and ring the bell for more financial fire. And remember, whether it's central bank drama or dollar dives, your boy the boss has got your back. Until next time, keep hustling, keep learning, and keep fighting the good economic fight. Peace out.